Hey everyone. Today I just really wanted to make sure that we have enough time, that we give Matt time to do the seasonality, and that we all get out in time to do Roger's class. So I definitely want to be in his class as well. I want those three stocks. Today I thought I would mostly answer questions because I didn't really get to answer questions. Seems like there was a lot of them yesterday. I could go over new stuff, but why pile things on top of you when you haven't even understood the old stuff? So if you got any questions, send them my way. We can also take a look at anything you want to look at. I can show you how I see and evaluate things. So maybe I can start with that before. Yeah, I haven't gotten any questions yet. One of the things that was mentioned today was Intel. Intel, if we take a look at our our gamma exposure at Intel, what it's showing me is that the largest exposure is right at 22. And so I think when you guys started talking about it, it was probably around 20. And you can see how yesterday we were talking about how these levels act as magnets. And you can see that we got drawn to 21 and then right at 22. Right now, we were currently trading right around 22, I believe. And so what gamma is telling me is that this is likely it. We're probably at the level that we're going to stay at, or we'll touch that level and maybe bounce back. So the one reason why I say that is this exposure right here. The most of the exposure is at August 30th. That's today. And then when that expires, our exposure cuts in half. So unless people renew or roll their options, then there's not going to be as much pressure on Intel as there was this week. And another way I can visualize that is that huge spike of expiration right on August 30th at the 22 level. So the 22 level may not be good after this Friday. We'll have to see how the new options come on. But for today, if you're at 22 and you're in profit, if it was me in that position, I'd take my profits. I wouldn't wait to see how everything gets rolled. Okay. So this is one way that we use these gamma levels to make our trading decisions. So let's see what kind of questions we've got. How important is gamma in trading to you? Gamma is another data point, and it is sometimes my investment thesis. So in trading, you always want to start broad to narrow, just like Roger always does. So we always start with a trade idea. Institutionally, I was always taught trade idea, trade idea, trade idea. It was my job to come up with trade ideas every day, but really every month, every quarter, every year, we had different levels of trade ideas that we were looking at for different time horizons. So you always start with your trade idea. Then once you have an established idea that you really believe in, then you're going to decide on your timing. When am I going to execute this? Is it going to be today? Is it going to be in the next few minutes? Is it going to be next week? Is there some sort of event that I'm waiting for before I go and execute this trade? Then it's your trade execution. How am I going to execute this? Am I going to do it in the options market? Am I going to do it in the futures market? Am I going to do which exact stock? If I have an idea, it's not necessarily at the level of a stock. It could be, I'm really like semiconductors right now. And then, oh, am I going to trade NVIDIA? Am I going to trade TSEM? Just like Roger was telling us about today. NVIDIA is not the best stock right now if you are long SMH. If my trade idea, my trade thesis is that that semiconductors are going to do very well, then how do I execute on that idea? It's not going to be in NVIDIA right now, and will be more likely in something like TSEM. And then which option, which expiration, and then once you execute, then you have your trade management, your risk management. So you're always thinking about all four of those things. So in the spectrum of all of that, gamma comes when I start thinking about timing and also my management. Where do I set levels? Where are my targets? Where am I going to set stops? And then, like I said, sometimes it does form my investment thesis. And that's when we see like what I was describing yesterday, when it seems like there's a really high potential for a speeding bullet right here. So where it looks like that we'll just get sucked to a particular strike very, very quickly. I said that I can tell when a market is being controlled by a hedge fund or by market makers. So that is snapshots over time. So how do you tell when it's by institutions or the market maker? And a lot of it is the volume and activity inside the particular stock that we're looking at. So if we have a huge amount of volume, that volume is not being driven by a market maker unless they are forced to be hedged. So for the most part, when you look at large pieces of large volumes, you're looking at an institutional movement like this day, huge volume that happens to come at a low, then that is going to be most likely an institution. So what we want to look at in terms of charts like this is institutional buy and sell campaigns. Is this the beginning of institutional buy or sell campaign? Is it a continuation of an institutional buy or sell campaign? And this is why we all need to take Roger's VWAP class and the pinching VWAPs, because what did Roger say? He said, well, I like to put things at the high and I like to put things at the low. Well, if this is the high, don't you think that an institutional sell campaign started right here and maybe was added right here? And then this was the end of that sell campaign and beginning of a buy campaign. And so that VWAP will give us, if we anchor to those 2 points, we are at the beginning of a buy campaign and beginning of a sell campaign. And what you're looking for is the average price that the institution gets in, because that's all the institution cares about, because they are, as long as the market stays above that average price, if they're in a buy campaign, then they're making money. And so when it returns to that average price, which is the VWAP, then they are incentivized to buy even more. One, to protect their position, because then if it dips below that VWAP, then they are losing money. And then two, because that's the value. That's their business model. They buy at that point to add to their position because they're not done buying. If you see it touch the VWAP and it breaks or stays at the VWAP, it's because they're done buying. They finished their buying campaign. They're full on their position. Right? And so that pincher class, I'm really excited about, because it is a look into the very largest institutions, the pension funds, the insurance companies, all of them, exactly how they go in and look at their average price and decide on their buying and selling. Right? So that's how we know if it's more likely, is it the market maker in control or the institution in control? How do you calculate position of the market makers? Do you put net puts and calls and figure out, okay, so gamma exposure. So what you're looking for is the dollar exposure of every single option, and then you net it out. So when I showed you, I guess that's all of the strikes across all expirations netted together. This shows me all of the exposure at a particular strike across all expirations. This one shows me expiration and strike. And then this one shows me by expiration. These two are the same. These two are the same, just zoomed in, zoomed out. So, and then this is the sum total of all of it. And so what we look for is options open interest, and we look for the gamma, we look for the dollar price, and then we need to, I like to index it on a percentage basis rather than a $1 move basis. And so we need to add that in together. We multiply all those things together, and that gives us our dollar exposure at particular strikes or whatever. Short definition of gamma pocket: market maker balancing their positions. Yes, they're hedging and balancing. Yeah, they're making sure that they don't lose money on a huge move. So at the very first class ever, someone asked me, does the market maker ever lose money? The answer is yes. If it moves way too fast for them to shift their hedges, then they'll lose money. So that happened in GameStop. That a couple of years ago when GameStop got squeezed, that happened, and then Citadel called and pulled all these strings. So that's because they were the market maker and they were losing money. Right? So how does news play into Intel? How does news play into it? So news does have the potential to cause a market to move faster then the market maker can hedge themselves. So it just depends on the nature of the news. Most news does not have the magnitude in order to do it, but we can see that currently the exposure on Intel is 35 million. That's not huge. That's something that a market maker can cover quite easily. If we look at something like Apple, sorry, my software that I wrote is not super sophisticated yet. So there is a little bit, it's not super fast. And so just bear with me while I get something like Apple open. So that'll run. But let me answer another question while we're doing that. Um, where do you find gamma on stocks and ETFs? You just go to the option chain. And it's something that brokers give you. And that's why I like it, because a lot of the work is done for me. I know exactly the market maker's positions. I can see what gamma is on every strike, on every expiration. They give me the gamma. So there are lots of zeros right here because they're too far out the money. And did Apple open? Yeah, Apple opened. Okay, so you can see, look at the exposure on Apple, 1.4 billion. So it'll be a lot harder for a market maker to cover this than it would be for something for Intel. So one of the things that we look for is these really large notional gamma exposures, because if they happen to move and run really quickly, then that can create a speeding bullet type of situation where the market maker is forced. Now, it also has to be in a significant volume. So does 1.4 billion represent a significant volume to Apple on a daily basis? And right now, Apple is trading 14 million shares today. That's very low. So on a day like this, it might not matter. Or maybe on a day like this, if it was a very sudden news, maybe that was the market maker trying to cover themselves. But that would be probably a much more extreme bar. But on a day like today, if they had to suddenly cover 1.4 billion's worth, it would be very difficult for them to find that liquidity, and they would start driving the prices higher or lower, depending on which direction they needed to cover. How do I monitor top gamma strike during the day after I take up my trade? You would need like this. The way I do it is I use my software. I have to keep on updating it. So unfortunately, I have to run through that sequence that you just saw me do, because I don't have live data yet. So eventually, I'll get some programmer to help me. We'll hook into a live feed. We'll be able to see it in real time, adjusting.
That's awesome.